Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Indian risk assets withstood another volatile week. Global equities consolidated for the second week after higher than expected US inflation data and commentaries from US Fed officials further dented investor optimism of a likely pause in policy rates going ahead. US bond yields rose for the fourth consecutive week. Among the major equity indices, for the week the S&P 500 index was down 0.3%. The MSCI Emerging Market and MSCI Asia ex-Japan indices fell 1.4% and 2.2% respectively. Major Asian markets also posted losses of over 0.7% for the week. Back home, Indian equities delivered positive returns for the third consecutive week. The Nifty index recovered from a weak start and traded range-bound for the rest of the week, but posting a gain of 0.5%. Broader markets performance was weak as the Nifty Mid-Cap index fell 1.2%, while the Small-Cap index fell 1.1% for the week respectively. Among sectors, metals and capital goods were the best performing sectors with gains of over 1.6%, while the utilities and realty were the worst performers with cuts of over 2.7% for the week. The Indian fixed income markets remained under pressure on rising US bond yields. Bond yields eased later in the week after the RBI rejected bids at higher than cut-off yields at the weekly auction. For the week, the 10-year Indian government bond yield rose by 1 basis points to 7.37%, while the 3-year and 5-year Indian government bond yields fell by 5 basis points and 7 basis points respectively. The INR depreciated over the week as the impact of lower crude oil prices were negated by higher US bond yields and strengthening US dollar. For the week, the INR fell by 0.4% to close at 82.8 per dollar. Other important news during the week was on India's inflation. The consumer price inflation, or the CPI, accelerated to a 3-month high of 6.52% in January this year compared to 5.72% last month. This was largely driven by food article prices inflation, which jumped higher with the cost of cereals and spices recording the biggest increase in recent times, while pressures from housing and miscellaneous also remain elevated. On a sequential basis, CPI rose 0.46%, reversing a 0.45% fall in the month of December. India's wholesale price inflation, or WPI, moderated to 4.73% year-on-year in January this year from 4.9% in the previous month. This reading was the lowest since February of 2021. The moderation in WPI was led by a slowdown in the prices of both fuel and power and manufacturing products, despite a faster rise in basic metals, primary and food articles. On a sequential basis, the WPI edged up 0.13% in January after a 1.38% fall in December. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.